Hello, welcome to my channel today. This is King Suto. This is the first time of joining us. Thank you for coming to my channel, and if you're a returning subscriber, thank you for your support so far. Please ensure you like this video, comment, and subscribe if you have not done that. Okay, now today we want to continue on our series in our markup and margin. Now we have seen different videos regarding from the introduction, and we have solved various questions relating to that. If you have not seen the video, don't worry, I will drop it in my link below, or I will drop it up here so that you watch that before this. Okay, we have done like several videos before this, so ensure you watch that so you can have a glimpse and understand it better. So in this series of markup, we want to see a question. It said, use the following information to calculate these purchases for the year, cost of sales, gross profit, sales, and margin. So they gave us these creditors, opening balance and closing balance, stock, opening balance and closing balance, and they said markup is 25%. And they said cash paid to creditors is 7,000. So they are asking us to use this to answer this question. Okay, so this is very simple. We have done the introduction part. Please watch that video before this. Okay, so we want to start this now. Now, if we have solution to this. Now, the first thing they're asking us to prepare is the purchases for the year. Okay, so to prepare the purchase for the year, since we are giving creditor, we can prepare the creditor's control account. Okay, creditor control account. Now, we have done creditor's control, we have done control account. If you've not seen that video, don't worry yourself. I'll drop it in the link, or I'll also drop it here so that you watch that video to know about control account and how you can use it to get purchases. Okay, so from this now, so if we're looking for purchases, that's the first one, purchases, and we can do that with a control account. Okay, so if we can do that with control account, now it will be creditors control account, because we also have for debtors. So creditors control account. Now they say cash paid to creditors. Now one of the rules of creditors control account is you debit what they receive. So we have cash here that they receive, that they pay to creditors as 7,000. Okay. Now we have creditor. Now I said while I was treating that control account, I said the opening balance, the creditors have a credit balance. So the opening balance for the creditor as balance brought forward is 5,000. Why this, the closing balance closes it, balance carried down as 8,000. Okay, so the balancing figure becomes the purchases. The balancing figure becomes the purchases. So 7 plus 8,000 will give us 15,000. So we're supposed to have the same balance, 15,000. So 15,000 minus 5 is giving us 10,000. So our purchases is what? 10,000. Therefore, the purchases is what? 10,000 there. That's that. Very simple. Okay. The next one is the cost of sales. The cost of sales. As the cost of goods sold, we can do that with the trading profit or loss account. Okay. So I or B is a cost of sales. Now the cost of sales, we can do that with trading profit or loss account. That is preparing the trading account. Okay. So now the trading account, the first thing that comes here is our opening stock. Now what's the opening stock? Look at it, the one at the beginning that have the beginning date as 1,200. Now we'll say add purchases. Normally add purchases. Now we have solved for purchases as 10,000. So we have 10,000 plus this. That is 11,200. Now there is no carriage inward. There is no return outward. So the next thing is to less closing stock. Now if you less closing stock, that's the stock at the end. 1,100. So this is giving us 10,100. So this becomes our cost of goods sold. So therefore, our cost of sales is 10,100 naira. So that's our cost of sales. Okay? So that is the second one. The third one, which is C, gross profit. Now, how do we get gross profit? Now, to get gross profit, if we would have wanted to use a trading account also, it would have been sales minus cost of goods sold will give us gross profit. But in this situation now, we don't know sales because they are still asking us what is sales. So what do? So we are going to use the markup formula. Remember, we said the markup is the relationship between profit and what? Cost price. Okay, which is the gross profit. So with that now, they gave us a markup of 25%. And we already have cost of 10,100. So let's use that to find this. So remember, we say but the markup is the profit over cost price. Okay? So the markup is profit over cost price. So that's a gross profit. Now, but the markup is given here as 25%. Okay? So we have 25 over 100 equal, our profit is unknown, that is P, which is a gross profit as it stands for. Then the cost price is the cost of goods sold, that is 10,100. And to get this now, cross multiply, this give us 100P. 100 times P is 100P equal 25 times 10,100. Okay? So if we have that using our calculator, so 100P, 25 times 10,100 will give us 22,500. And to get P, which is profit, we divide both sides by 100. So this cancels this. My P is now equal to 2,525. Now therefore, the gross profit is equal to 2,525 naira. Okay? So that's our gross profit. The next one is sales. What is sales? Now how do we get sales? The sales. Now, sales can, if you remember, watch, we said the gross profit can be gotten also, remember, as sales minus cost of goods sold. Okay? That's the gross profit. But now we've already known the gross profit as this. So we'll put it there, 2,525 equals, our sales is unknown, minus, what's the cost? Cost of goods sold is 10,100. So to now get sales, we transpose this to the other side so that sales can be alone. So we have 2,525. This is minus 10,100 crossing over, it turns to plus 10,100 equals sales. So this is now 2,525 plus 10,100 will give us our sales as 12,625. Invariably, it is sales is gross profit plus cost price. That's what will give you what? The sales. So that is 12,625. Okay? So the next one and the last one is the margin. What's the margin? I said the margin also is the relationship between the profit and the what? The selling price. So since markup was given there, so that is 25 over 100, which is 1 over 4. So that's markup. And to convert markup to margin, we have done that check in the first video I was talking about. So we have to convert this 25% markup to margin. And to convert, you add the numerator to the denominator. So 25 over 100 will give us 1 over 4. Okay? So if you add 1, it's 1 over 5. So that is the margin 1 over 5 or 20%. Okay? Or 20%. That's the margin. Okay? So that is the question they're asking us to solve. Very simple. Okay? Now let's see another question now relating to this. Don't go anywhere. Let's see another question relating to markup and margin, how you can solve it. Let's see another question, quite different, okay, extended with the one we've seen before, that relates to what still markup and margin, okay, to expand our knowledge on it. So it says the following information was extracted from the books of Asampe in 2005, okay. Stock 1st January 2005, 6,500 Ghana cedis. Stock 31st December 5,500. Creditors are the first 4,000. Creditors 31st 5,000. Now it also said cash paid for goods during the year is 20,000. A markup is 25%. Selling expenses 2,750. Now we are asked to calculate margin, purchases, stock turnover, gross profit. What is the sales? And they said percentage of gross profit on sales, percentage of net profit on sales. Okay, so this is extended to what we've seen before. Okay, so let's just solve this now. If we have this now, so the first one says margin. We have to calculate the margin. Okay. Now, the margin, this is given, the markup is given in this. So, we have to convert 25% is 1 over 4. Okay? And it's 1 over 4. Now, to convert to margin, like I said before, we add the numerator to it as 1 over 4 plus 1, which gives us 1 over 5, or 20%. That is that. Okay? So 20% is the margin. That's that on that. The next one, B, we said we should calculate purchases. Purchases, like I said before, we are not giving sales so that we can get the purchases. So we are going to use the creditors control account. Like I said before, I've dropped the link so you watch the control account. So let's prepare the creditors control account. Creditors control account to prepare or to get our purchases. Okay? First one, they say cash paid for goods during the year. So we have cash here, that's 20,000. I said the creditors, whatever they receive is debited to it. So the next one, creditors at the beginning, it have credit balance. So we have balance brought forward. The fund at the beginning, 4,000, which is January. So closing balance is supposed to be at this side, balance carried down, 5,000. So if we have 25,000 here, so the balancing figure is supposed to be purchases. So we're supposed to have 25,000 here also. So 25,000 minus 4,000 will give us 21,000. Okay, so our purchases, therefore, our purchases is 21,000. Okay, so the next one is stock turnover. The stock turnover, what is C? Okay, now the stock turnover is giving us the formula. The stock turnover is giving us cost of goods sold over average stock. Okay, and we said but the average stock is opening stock plus closing stock divided by 2. Okay? So to get our average stock is opening stock plus closing stock divided by 2. So once you have the average stock, you input it here. So cost of goods sold divided by average stock is what will give us what? The stock turnover. Okay? So it means that we have to get our cost first. Okay? Now to get our cost first, the same way, we can use the trading account. We can use the trading account. Okay? So the trading account, which is opening stock. Opening stock, the stock at the beginning is 65 plus purchases. We have calculated purchases as 21,000. So that is 27,500. Now there's no return outward or carriage inward, so just say closing stock 5,500 as closing stock, and we are lessing it. So we have 00, we have 022. Okay, now this becomes our cost of goods sold. Okay, so therefore the cost of goods sold is now equal to 22,000. Okay, so now let's write the average stock. Let's conduct the average stock so that we can get this. So average stock is opening stock plus closing stock. So what's opening stock? 6,500 plus closing stock is 5,500 divided by 2. So 65 plus 55 will give us 12,000 divided by 2 will give us 6,000. Okay? And therefore, our stock turnover, which is equal to cost of goods sold. Now the cost of goods sold is 22,000. 22,000 divided by 6,000. So what do we have? 22,000 divided by 6,000. So we have 3.6 times, which is approximately 4 times. Okay? So stock turnover is 3.6 times, which is approximately 4 times. So the next one is gross profit. Now, how do we get our gross profit? Okay? Now, the same way, we say the gross profit, remember our markup. So the markup is the relationship between profit and cost price. So if we have the profit as, say, markup is profit over cost price. So markup is already given in the question as 25%. Which is 25 over 100 equal profit is unknown over what is our cost? We are solved for cost as 22,000. Okay? So you cross multiply, we have 100p equals 25 times 22,000. So to get p, which is the gross profit, we divide both sides by 100. So if this cancels this, my p is now equal to 25 times 22,000 equals 550,000 divided by 100 will give us 5,500. And therefore, my gross profit is equal to 5,500 Ghana cedis. Okay? So that's the gross profit. Now they say, what is the sales? Like we've done before, the sales is equal to gross profit plus cost. And what's the gross profit? We have solved it as 5,500 plus what is the cost? 22,000. So 22,000 plus 5,500 is 27,500. Okay? So that is the sales. Now the next one is said the percentage of gross profit on sales. F. Percentage of gross profit on sales. Now, as percentage of gross profit. on sales. Now it is given as gross profit over sales times 100 over 1. Okay? Gross profit over sales times 100 over 1. Now, we have solved the gross profit as 5,500 over, what is our sales? 27,500 times 100 over 1. So, we have 55 divided by 27.5 times 100. So, that is 20%. So, the gross profit on sales is what? 20%. Now, why? The last one, which is net profit on sales, percentage of net profit on sales. That is G. Percentage of net profit on sales. It is given as net profit over sales times 100 over 1. Okay, that's the formula. Net profit over sales times 100 over 1. Now, before we can do this, we should be able to get our net profit. Okay, now how do we get net profit? Now, net profit is equal to the gross profit minus expenses. So we already have gross profit as 55 minus. Now, watch here, selling expenses 2,750. So 55 minus 2,750 will give us the same as 2,750. So that's a net profit. So let's calculate the percentage. So it is now 2,750 over our sales is 27,500 times 100 over 1. So that will give us 10%. Okay? So that will give us 10%. So that's how to solve the markup and margin. Okay? Now this is basically how different questions on markup and margin may arise. Now we have seen various questions on it. Ensure you watch that, like, comment, subscribe, and share our video. Thank you very much.